Hello everyone, welcome to Rajeshwari's Commerce and Management Study App. I am Rajeshwari here. Let us discuss today profit and gain of business or profession. So profit means when income is excess more than the expenses, then it is called as profit, or gain on any assets more than the actual value. Whatever the gains you have earned is called as gains. Under business or profession, let us understand two different words. It is business means under income tax, we'll call business as section 2, subsection 13, trade, commerce, manufacturing. All these we will call it as business only. Trade, commerce, and manufacturing. In under commerce, it includes, it can be a legal or illegal business, regular or irregular business, or any nature of business is called as commerce. Okay, this needs and this needs a skills, right? And profession means section 2 subsection 36. Profession includes specialized education and training needed. And here you need to observe the profession includes the vocation also, like example plumber, electrician. This all comes under the vocation. Okay, vocation. Now, PGBP is the biggest section that covers from section 28 to 44 dB. See, why we are finding out the business income? If we are anyhow, we are preparing the final accounts, right? Why we want to find out the business income again? See, here we need to find out the taxable business income and taxable professional income. When you find out the taxable business income, you have to find out what is the actual profit of the business, because some of the expenses which are disallowed under the income tax under the business will be debited to the profit and loss account, and some of the incomes which are not covered under the head of the profit and loss account also credited to the profit and loss account. So we want to find out the what is exact business income. For that, what we will do, we'll add and less, we'll add the expenses which are disallowed under the business income will be added, and we will deduct incomes which are not related to the business to find out the actual business income. Here the profit is income minus expenses, you will call it as profit. The incomes are segregated into three different income, that is real income section 28, deemed business income section 41, presumptive income section 44 AD, section 44 AE, section 44 DA. These are the three different sections. Presumptive income is the one of the shortcut method. On the net profit and turnover, on total turnover, 8% will be calculated as a presumptive income. Now, expenses. Expenses again categorized as allowed expenses, disallowed expenses, and special provisions. Allowed expenses covered under section 30 to 37. Disallowed expenses or special provisions covered under section 38 to 43D. Income chargeable under the head of profit or gain of business or profession. Here, section 28 is called as the chargeable section. Profit or gain of any business profession carried by assessee during the previous year. What is the first condition when you will call it as income chargeable? First, you should be earned in the previous year, and it should be earned by the assessee only. Others income you can't show. So it should be earned by the assessee, and it includes export incentive. Export incentive is if they paid any cash incentive, then import entitlement, duty drawback. This will be considered. And any assistance, grant, or subsidiary received from the state government, central government related to business or profession will be considered. Value of any gift, benefits, or perk arising from business or profession will be considered as the income chargeable under the head. Amount received or receivable. It can be not carrying out activity relating to business or profession, not sharing the intangible assets. Then any amount received by the partners. It can be interest, salary, bonus, commission, or any remuneration from the firm or LLP up to deduction allowed by the firm under section 40B will be considered as the business income. Then section 29 tells us to find out the taxable income from the business. So that is income from profit and gain business computed as per this section 30 to 43D. First we are considering the net profit whatever we have debited to the profit and loss account. Net profit. When your income exceeds the expenses, then net profit will be recorded under the debit side of the profit and loss account. That profit here we are considering. To that profit, we are adding the expenses which we have deducted. Okay. Understand the concept, understand the format. It is very easy. Okay. Depreciation debited to profit and loss account. This you have deducted, but here you are adding it back. Then expenses debited, but it is not allowed. Then income not credited but taxable under the this head will be considered. Then you need to deduct depreciation as per the income tax act, whatever as per the act it is provided. Expenses not debited to the profit and loss account but allowed as a deduction, those expenses will be considered. Income credited to the profit and loss account but not taxable under this head will be considered. Then we will get income from business or profession. In detail, we will understand the format. Computation of taxable income from business, that is profit as per the profit and loss account we are considering. We are adding the expenses which are disallowed, expressly disallowed. Understand this. Payment in cash is not allowed. Up to 2,500 only it is allowed. More than 2,500 it is taxable. Excessive payment to relative, it is you made a payment to relative, it is personal. We have a business entity concept. What that concept says, owner and the business should be treated separately, so it is relatively it is disallowed. Interest on capital, see business entity concept again here it applies. Proprietor salary, then personal payment of the proprietors, provision and reserves, all direct taxes, income tax paid, wealth tax paid, this will be considered. Capital expenditure, capital in nature will be disallowed. Fines and penalties, charity or donations paid, any contribution to the political parties paid, payment made outside India, staff welfare fund, past any losses if it is there that will be considered. Any advertisement to political magazines, this will be considered. Now we will deduct income not taxable under this head business but credited to the profit and loss account. Rent from house property, then profit on sale of asset, then interest on deposits, dividend received will be considered. Bad debt recovered, it is disallowed earlier. Agricultural income, all agricultural income. Interest from debentures will be considered. Interest on post office saving bank account. Share of income from HUF. These are all incomes, but it is not related to the business. That is why it is added already in the profit and loss account to find out the net profit. So you are minusing that because taxable income should be purely to the business, right? Because you are paying a tax on your business income, not on the other incomes. We have separate heads for that. So that is why you have to minus these incomes. Share of income from partnership firm, winning from lottery. Then some of the losses which are allowed as per the income tax rule but it is not debited, those expenses will be deducted here. That is bad debt written off, depreciation under section 32 as per the income tax, any bonus or commission paid, any indirect taxes paid before filing the return. Only indirect taxes, direct taxes is we are adding it back. because that is not related to the business. Income tax, wealth tax, it is all related to personal. That is why. Then you have to add income and gain from taxable under the head of business, but not credited to the profit and loss account. Some of the incomes which are not recorded, that will be shown: commission received, discount received, interest from debtors, rent from employees. Then bad debt recovered, it should be allowed earlier, disallowed earlier. First stage we are taking it. Unrecorded business income, if any unrecorded business income is there, that will be considered. Then you need to add overvaluation of opening stock and undervaluation of the closing stock. Then you need to deduct undervaluation of the opening stock and overvaluation of the closing stock. Then we will get taxable income from business. And we have other, some of the expenses which are allowed, that is section 30, rent, rate, repair and insurance for building used in the business or profession is allowed. Then repairs is allowed, revenue nature will be allowed, capital nature is disallowed, insurance is allowed. Section 31, repair and insurance of plant and machinery, repairs will be allowed, insurance allowed. So these are about the expenses allowed and disallowed and format of the business. Let us solve one question to understand in depth. The question is, Prakash is a small businessman. He gives you the following details drawn from his books of accounts for the year ended 31st March 2020. Compute net profit after charging the following 55,000. So net profit is given. We are taking based on this only. On this only we are doing addition and subtractions, right? Provision and reserve debited to profit and loss account. Provision for doubtful debt 30,000. Depreciation reserve 40,000. Household expenses 60,000. Donation to Prime Minister's National Relief Fund 20,000. Other charitable donations 40,000. Checks issued for purchases 20,000. Telephone expenses 10,000. Advertisement expenses include 5,000 spent on nano signboard and gift rupees 50, customer at a cost of rupees 100 each. Audit fees 20,000. Patent purchased for rupees 70,000 during the previous year. Market survey expenses 8,000. Feasibility report expenses 12,000 on a new project of rupees 10 lakh. Income credited to profit and loss account where bank interest of fixed deposit 5,000, interest on post office saving bank account 3,000, interest on units of UTI 2,000. Opening stock is valued at cost plus 10% basis, whereas closing stock is valued at cost less, cost less 10% basis. Opening stock is valued was 1,32,000 and closing stock is valued at 1,44,000. Compute net business income for the assessment year 2020-21. Let us find out the business taxable business income. Yes, net profit is given in the question. So what is the net profit? Net profit as per profit and loss account. Loss account. Net profit as per profit and loss account is 55,000. For this, first we have to add expenses expressly disallowed. Expenses expressly disallowed. First is doubtful debt we have. Doubtful debt. Doubtful debt is how much? It is 30,000. Then depreciation reserve is there. Depreciation reserve 40,000. Household expenses. It is not related to business. That is why it is disallowed. Understand, disallowed. Household expenses 60,000. Donation. Donation to PM NRF 20,000. Other charitable donation. This reduces your profit. So only you have to add back this one to know what is your actual profit. Understand why we are adding it back. Okay. 40,000. Nano signboard. It is a capital expenditure. That is why we are considering it. Revenue nature we are not considering. 5,000. Again, patent is also capital expenditure. Patent purchase 70,000. Preliminary expenses. Preliminary expenses is 20,000. On this we have taken 4 by 5, 16,000. Then total 2 lakh 81,000. After adding net profit 3 lakh 36,000. Now we have to less income, incomes not taxable under the head business. Bank interest on fixed deposit. Fixed deposit 5,000. Interest on post office saving bank account 3,000. Interest on units of UTI is 2,000. Total this is 10,000. Then you need to deduct losses and expenses allowed as per income tax rule. What not debited to the profit and loss account. Depreciation. Depreciation on nano signboard is not shown, right? Depreciation on nano signboard. It is, we have a, I will do one more video on depreciation, because you need to understand the percentages and all. We have a different block of assets, on that we are calculating the depreciations. That is also important in business and profession. In upcoming videos I will do that. 500. Then depreciation on patent patent, it is percentage is 25%. 70,000 in 25%, 17,500, 18,000. Then we have add overvaluation of opening stock is there. Overvaluation of opening stock. Opening stock value is 1,32,000. It is overvalued 10%. 10 divided by 110. How 110? 10% is overvalued. So we are adding it to the percentage. 1,32,000 into 10 by 110, it is 12,000. Then less undervaluation of the total of this is 3,26,000, right? Undervaluation of closing stock 1,44,000 into 10 by 90 undervalue. So you have minus percentage. If it is overvalued, you are adding. If it is undervalued, you are minusing 10,000. So income from businesses, from business 3,36,000. 3,36,000 is income from business. I hope you all understood. Thank you for watching. Have a great day.